Hey everyone, happy Wednesday. Welcome back to another great stream. I'm Joe Pareca, and today we're going to be talking about real estate. I know, surprise, surprise. So thanks so much for everybody that's joining me. We have a phenomenal stream lined up today. I have probably a lot of new viewers in on this one. This is my fourth live stream of the week, and it's only Wednesday. So we've been all over YouTube. So thanks for hanging out. If you're new to the channel right now, drop in the comments, just say hello. Just say hi. Let me know where you're watching from. I always love to know who's watching and what part of the country or world that you might be watching from. So hello to everybody that's new out there. Today, we're going to be talking about how the mortgage industry could be in a little bit of a tough spot and really no fault of their own. And we've got a couple articles to go over, and if time permits, we've got a little video clip. We're going to hear a message from Mr. Jerome Powell. Hey, Cackleberry, what's going on? Thanks for joining. Hope you had a good week. Wee, what's going on, buddy? How you doing? Thanks for hanging out in the stream. Good to see you. Thanks for being here. So we got a couple things going on. We're going to be talking about, the first thing we're going to talk about is, like I said, insurance and how it's affecting the mortgage industry. And Jerome Powell had some really cautionary words for Congress when he testified in front of Congress about a week ago about the scenario that we could face if we continue to have issues with homeowners getting insurance and affordable insurance. And then if time permits, we're going to be going to another article. It also has to do kind of with affordability a little bit. We're going to be talking about the whole commission thing. So as you guys know, last summer, there was some switches up, there was some change ups in commission and the commission, or should I say compensation structure in the real estate industry. And now we finally got some data, and we're going to see that after 6 months of these new implications, has anything actually changed? Are people seeing lower commissions? Are people seeing better agents? Have agents got out of the business? All of this stuff is stuff that we are going to talk about in the second article. So sit back, relax, get comfortable, maybe grab your favorite beverage, and let's hang out for about the next hour or so. And if at any time you guys have any comments, questions, please put them in the chat. I'm so serious when I tell you guys this. The best part about doing these live streams is interacting with you guys, the chat, the people that are here watching me. So if at any time you guys have questions, comments, and whether or not they relate to what we're talking about or not, fire them off. If it's related to real estate, put it in the chat, put it in the comments, and let's talk about it. So if you've got a question about a house you're looking at, if you've got a question about, something's going on, fire it away, and I'll do my best to give you the best information that I can. Let's see. The reassessment of my home just went up 43%. Let's see what happened to insurance. And if we remind me again, where are you at? I think you're back on the East Coast, right? Remind me where you're at, because the reassessment went up 43%. Oh my gosh. Hopefully it doesn't kill your taxes too much. Yeah, and let's see what insurance does. I'm here in Southern California, as you know, and I am a little bit nervous for my insurance renewal to see what the price for that's going to be. And that is coming up. Actually, I think I have to renew my insurance in June or so. So it's coming up. So we'll see what happens. Maryland. Okay. Yeah, cool. All right. Yeah, we'll see what happens with your insurance. Hopefully it doesn't go up too much. All right. So let's get into the very first article. So the first one that we're going to be talking about here. Maryland is on track to be the second California when it comes to taxes. Maybe the California of the East Coast, perhaps, although maybe with not as good as weather. Hopefully it doesn't go that way. All right, so let's get this up on your screen. Bingo. All right, so there's our buddy, Jerome Powell, who nobody likes. But I like Jerome, actually. I think Jerome did a good job. Jerome's got a really difficult job. Everybody loves to hate on Jerome, but yikes. Oh, let's see, Cackleberry, what do you got? Are you with an agency or the unfair plan? I see what you did there. Luckily, I'm with an agency. I'm with AAA. And I will say that for those of you watching out there that are having insurance difficulties, especially in California, talk to AAA. AAA is really good about offering insurance and coverage for a lot of properties, especially when a lot of insurance companies are pulling out of California or have paused writing policies. AAA has never let me down. They've never let my clients down, but still every once in a while they'll object to something. So, if you have a house in an extremely high fire zone, I don't know if they'll go for that, that type of thing. But they're certainly a little bit more reliable than Allstate, Farmers, Geico for sure, and all the other ones out there. So luckily I'm with an agency and I don't have to partake in the fair plan, or as you put it, Cackleberry, the unfair plan, which I think is probably a better word for it. Yeah, I would say give them a call, see what they say. Maybe they can do something for you. I know where you're at, the area that you're in. You're probably going to be stuck with the unfair plan, but hey, it's worth a phone call, right? It's worth a phone call. All right, so here we are. I'm going to make this a little bit bigger for you guys. There we go. All right, so this was as of Feb 12. So, like I said, within the last 7 days or so, our buddy Jerome, chair of the Fed, testified in front of Congress about a myriad of things. It wasn't just about home buyers or insurance or things like that, but it was just a basic general update with what's going on with the economy and the way that the Fed sees the economy. And this is a routine thing that the Fed does every few months or so, go in front of Congress, basically give them an update on the health of the economy as the Fed sees it. So this was a routine meeting, and let's see what he had to say. In a wide-ranging discussion on the effects of Trump tariffs, we'll wait and see, to mortgage rate cuts, we'll wait and see, Federal Reserve Chairman Jerome Powell has warned that obtaining mortgages in certain parts of the United States may become nearly impossible in the future due to mounting challenges in the insurance sector. Speaking during his semi-annual testimony before Congress, Powell addressed the growing issue of insurers withdrawing from regions at high risk for natural disasters. If you fast forward 10 to 15 years, there are going to be regions of the country where you can't get a mortgage, Powell said, explaining that financial institutions and insurance providers are increasingly avoiding areas prone to wildfires, hurricanes, and other environmental threats. And I got to be honest with you guys, I don't think he's wrong. I would certainly don't want to see this. I hope this doesn't happen. But at the end of the day, if we have large areas of the country that can't get insurance, that means people can't get mortgages. And that's going to further limit the available supply of inventory, which is going to keep home prices very high in some areas. And in some areas, it's going to tank them, right? It's going to tank them because if you have a house to sell in, let's just say, in a high fire zone in the hills of California, and you go to sell it and there are just no insurance options available, well, you can only sell it to cash buyers that don't want insurance, which is going to severely limit the desirability of your property and therefore most likely having a pretty major impact on the value of your property. So that would not be a good thing. Hey, Innovative, what's going on? Hope you're doing well, buddy. Thanks for joining the stream. Jerome had an impossible job. This is what I've been saying. Innovative, you and I, we're like spirit animals, brother. He had an impossible job. Telling someone to control inflation when 80% of all dollars were created in the last 4 years is like telling someone drive safe after you cut their brake line. That is, you hit the nail on the head. Everybody loves to hate on Jerome. Jerome did a phenomenal job considering what he was dealing with. Considering we were in an era of an administration change, insanely high inflation, people clamoring about how things are too expensive. I really think Jerome did a great job. And I would agree with every point that you just made, Innovative. It was an impossible job from the start. And you're right. It was the deck was stacked against him. We flooded the economy with tons of cash and tons of cheap money, with interest rates that were rock bottom, at or near zero for the federal funds rate and below 3% for the mortgage rate. And then people wonder why everything gets so expensive and they want someone to fix it. And we've talked about this before on the channel, making corrections to the economy as a whole, or the housing market as a whole, or the stock market as a whole is like trying to turn the world's largest cruise ship on a dime. It does not work that way. It takes a lot of time, energy, and momentum to get that ship to turn. And quite frankly, I think Jerome did a pretty bang up job for what he was working with. So I'm right there with you, Innovative. That's a good comment. And as always, you're making me laugh. So I appreciate that. Speaking during his semi-annual testimony before Congress, Powell addressed the growing issue of insurers withdrawing from regions at high risk I just read that paragraph. So we don't need to read that one again. The ongoing instability in the insurance industry stems largely from the escalating frequency and severity of climate-related disasters, which have led to substantial financial losses for insurers. Most companies, including State Farm, one of the biggest, have already canceled thousands of policies in high-risk zones. This trend has left many homeowners with limited options, forcing them to rely on state-backed insurance programs, which, as you've heard us refer to, that is the FAIR plan, or as Cackleberry and I like to refer to it, the unfair plan, because it's very expensive and it doesn't cover a whole lot. The last resort insurers often come with significantly higher these last resort insurers often come with significantly higher premiums and provide more limited coverage compared to private alternatives, i.e. the unfair plan. Mortgage lenders generally require homeowners to carry insurance as a condition of their loans. It's not even generally. I mean, it's not a law, right? It's not a law, but generally it's like 99.99% of the time. The only time maybe you don't need to carry insurance if you have a loan for the property is if potentially you get a hard money loan. But even then, anybody that loans you money, they're going to want to use your house as collateral. Okay, well, what happens if your collateral burns down? Well, it doesn't do anything for the person you owe the money to, because now their form of insurance on your loan is gone. So pretty much all lenders are going to require that you've got some level of insurance because they want to protect their investment, which is your home. Powell emphasized that banks and insurers will not continue providing loans and policies if the risk is deemed unsustainable. Minnesota Senator Tina Smith raised concerns over the impact of this trend, prompting Powell to acknowledge that while interest rate adjustments may provide some relief for home buyers in the future, broader housing affordability issues are largely driven by supply shortages, a challenge outside of the Federal Reserve's jurisdiction, which is absolutely true. The Federal Reserve is not in charge of building houses or selling houses. That's not what they do. They don't control that. In fact, they really can't control that. I suppose one thing you could say is that if the Federal Reserve cut the Fed funds rate and lowered that and made money cheaper for businesses to access, then I guess potentially you could make a claim that more builders would have cheaper capital and could expand their businesses and build more homes quicker. But that, doesn't necessarily mean that could happen, although that argument could be made. But the Federal Reserve can't do anything when it comes to building more houses. And that is, I got news, guys. We've been talking about this for what? I don't know, a year. I don't know if I've been doing this for a year and a half. I've been live streaming every week. That's been the problem we've been talking about the entire time, is inventory, right? It's always been inventory. It will always be inventory. And no matter what you hear or see or click on about how inventory is not a problem, that's a lie. And if you want to challenge me on it, that's fine, because there's all sorts of data that backs up how many months of inventory we do or don't have in real estate in each given market. So Miss Tina Smith from Minnesota and Jerome Powell are exactly right, bringing up this inventory challenge. Still the biggest problem with affordability. There's a short-term problem that will go away in the coming years, but there's a longer-term problem with housing affordability. And that's going to be something that's not within our authorities or powers to affect. Powell responded to a question from Senator Ruben Gallego. He further noted that even if interest rates decline, it is uncertain whether this would alleviate housing inflation. This is very important coming up. It would unlock people's unlock people's low mortgages, but that creates both a buyer and a seller, he explained. It's not clear that that would be something that would drive down housing inflation. And in fact, if you were to cut interest rates, if you were to make interest rates lower and money cheaper and mortgages more affordable, well, the idea that a lot of professionals think, which would probably happen, is that prices would then go up, right? Because if all of a sudden you make something more affordable by giving someone a lower interest rate, right, it increases their budget. Well, now there's going to be more buyers that go, oh, I can afford more now. I can afford a house now. And if more buyers try to afford the same number of houses, guess what happens? Prices go up. So it's a little bit of a double-edged sword. We can't just cut the interest rate for mortgages, because it might actually lead to higher prices and potentially less affordability. Regarding Fannie Mae and Freddie Mac, Powell acknowledged the role government backing plays in keeping mortgages lower. However, he suggested that Congress would need to decide the long-term future of these mortgage giants, stating, putting housing finance back in the private sector has some appeal over the long run. So right now, Fannie Mae and Freddie Mac are government, they're federal government-backed institutions that buy mortgages. And therefore, basically the federal government is saying, hey, you know what? We'll keep the mortgage market sustained and supplied. We'll buy those mortgages. And as the federal government buys mortgages, the rate stays a little bit lower because lenders know, hey, we're going to be able to sell this and this is going to be a secured loan and we're going to get paid on it because the federal government is going to back it. But there has been some talk lately about privatizing those types of loan service providers and maybe taking them into the private sector because that could create more competition, which could then lower prices. But, you know, it's always a double-edged sword when we privatize things. Yes, number one, it could create competition. It could create alternatives for consumers. But number two, now we have a private company that is very clearly looking for profits first over people or product. And that could lead to further complications down the line. And insurers continue to retreat from high-risk areas, homeowners and prospective buyers may find themselves grappling with a tightening market where both insurance and mortgage availability become increasingly scarce. The financial landscape for housing remains uncertain, with affordability and accessibility facing mounting pressure from both climate-related risks and economic factors. And listen, climate-related risk, I'm not going to get into this whole thing. You know, this isn't what the stream's about. And you can have your own theory or thought on if global warming is real or what the cause is or whatever the heck that is. We're not going to get into it. But it cannot be denied that we are clearly having more frequent and more substantial environmental events. And think about it. What area of the United States hasn't been affected by a major environmental issue? And in fact, in one of the streams, I had a map that showed in the last 5 years which places have had major environmental disasters, and it's basically been everywhere. When I say everywhere, not every single city or state, but across the nation, it's pretty spread out. Fires on the West Coast, hurricanes and flooding on the East Coast. In the Northeast Coast, you have all sorts of crazy freezing winter storms that cause a lot of problems. In the South, again, hurricanes and winter storms. And then, of course, in the Midwest, tornadoes. You know, all sorts of these things are contributing to these higher insurance costs. And that is what is making people, mostly insurers and mortgage providers, a little bit nervous. Is it's not so much economic factors anymore. It's these type of weather-related events. Cackleberry says, exactly. Where do you go where they don't have any type of weather disasters? Yeah, you're exactly right. I mean, there's nowhere that you can really escape from it. And now, because these disasters have gotten so intense and so big, plus it's not just the climate's fault. We're starting to shove people everywhere. I mean, LA County alone has 10 million people. I mean, imagine if we had a storm, you know, that affected, half that population. That's a lot of people, right? I mean, things are so densely packed in now that when we do have a tornado, a fire, a hurricane, it affects a lot more people than it used to, which means more insurance claims, more damage, more payouts, and we end up with an issue where we don't have enough insurance coverage because too many people are being affected in too great of a scale. So yeah, you're right, Cackleberry. Where do you go? I don't know. I don't know what the answer is. It seems like anywhere you go, there's going to be some environmental natural disaster that you could get hit with. I mean, for the longest time, California was pretty safe because we just really only had to worry about earthquakes. And luckily, earthquakes haven't been a problem for us. And we are actually having more frequent, smaller earthquakes, which is good. Here in California, when we have more frequent, smaller earthquakes, it alleviates the potential for the big one, which would be a real problem. But now we have issues with fires even more so than we ever have. So I don't know, 6 of one, half a dozen of the other. Pick your poison, I guess. All right, so now we're going to switch on over and we're going to watch a little video that was on a local news station, KTLA 5. And they covered Jerome Powell's testimony to Congress, and they actually have a guy on there that gave some decent analysis and kind of his take and his thoughts. So we are going to move over to this. Give me one moment. And we're going to watch this little video clip from KTLA. Let's see, before we get there, let's see what Cackleberry's got. I'm glad I'm old because I can't take much more of this craziness. Yeah, I guess there's one positive way to look at it, Cackleberry, is that, at some point you won't have to deal with it any longer. And maybe that'll be the solution for everyone. All right, so let's see what this gentleman has to say about the Fed.
With us today, starting with the growing crisis in the insurance industry and the impact on mortgages. It's going to be really tough to buy a home.
What I'm about to share with everybody is just simply amazing. And the fact that the rest of the media hasn't picked up on it yet, I don't know. Maybe they were looking at the top line of what happened today and didn't pay attention to the lower stuff. What I'm talking about is Fed Chief Jerome Powell. He was testifying before the Senate Banking Committee today, mostly about interest rates, which is what he normally talks about. But in the question and answer period that followed, Minnesota Senator Tina Smith asked about the availability of mortgages in disaster-prone states like California. And the Fed chief, well, he stepped up on this, and here's what he had to say.
Both banks and insurance companies are pulling out of areas, coastal areas and things like that, or areas where there are a lot of fires. So what that is going to mean is that, if you fast forward 10 or 15 years, there are going to be regions of the country where you can't get a mortgage. There won't be ATMs. There won't, the banks won't have branches and things like that.
Let's just chew on that.
Yeah. So, if you don't have banks, ATMs, or insurance, how do you have a society? Now the brick and mortar bank, right? The brick and mortar bank is not as important as it once was. How many of you guys go into banks still? Like, I go into banks rarely. Most people don't need to go into them at all. And they've gone from these huge, big buildings downtown to now they're just these little kind of, shopping mall type banks. And so much stuff is digital and electronic, probably not as important, but still, cash is still king, right? And it's hard to have a community when you don't have a bank or an ATM. And it would be hard to believe that banks wouldn't be there. It's crazy.
For a second. That is the head of America's central bank, not only observing that insurance is becoming increasingly difficult to get in states like California, but about a decade from now, because you can't get insurance, you won't be able to get a mortgage in parts of places like California. That's a simply mind-blowing thing for a man in his position to be saying, not least of which is because it's not wrong. Mortgage lenders will not extend loans to people unless they have insurance lines.
And it is pretty crazy for someone like Jerome Powell. This isn't some crackpot, influencer. This isn't some one-off person that has some fringe job at the government. This is the guy. This is Jerome Powell. His whole life has been economics and the American economy. So for him to kind of validate the fact that we are staring down the barrel of an interesting looking gun, that's a problem. That should be a red flag. Now, I do think that there will be solutions, and I do think that people will adapt and overcome, because at a certain point, people aren't just going to not live in California anymore. We're not just going to abandon California. It's impossible. It won't happen. And people are still going to want to live here, and they're going to need to live here, and they're going to need insurance. I could very well see some new insurance company coming out of the woodworks, figuring out a new way to disrupt the insurance industry and say, you know what? We'll insure the people of California. This is how we're going to do it, and this is how we're going to make it affordable. Maybe it's going to take a large tech company that's got some experience in making things a little bit more efficient, and has the power to utilize some technology to potentially cut down costs on overhead, things like that. It's not going to be easy, and I don't think there's a straightforward, simple answer. But I would just find it hard to believe that every single insurance company is going to say, we're just not going to look for business in one of the most populated states and the most populated areas, not even just in the entire nation, but the entire world. That to me seems a little far-fetched. So I certainly think it's interesting that Jerome Powell is making these statements, and I think they should be founded. I think they are founded in truth, but also at the same time, 10 to 15 years is a long way down the line, and who knows what's going to happen in that time. And I wouldn't be surprised if we come up with some type of solution to the insurance issue. Let's continue.
If you don't have insurance, you're not going to get a mortgage. And so Powell is just making the obvious observation here that indeed, if things play out as they are, there is no financial incentive to issue home loans in places like California. And that really underlines what I've been saying for a long time now, and that is climate change and multi-billion-dollar disasters like the LA fires are simply beyond the scope of most private insurers. To be able to manage that level of risk, you need to spread the risk among the entire population, which means something like a Medicare for all approach to property coverage. And this is the only way that you're able to keep affordable premiums as well.
And he brings up another good point, doing type of like a Medicare thing where it's like y'all pay in, y'all get to use a little bit. I think that very well could be. And to be quite honest, when it comes to insurance, I know a lot of people don't like to go for that, and again, not a political stream. I don't want to get way into the weeds on this. I'm sure y'all got your own opinions. And if you want to share those opinions in a pleasant adult-like way, please do. But, a lot of people don't like the whole, let's pay into the community pot and then all help each other. It's the whole socialism buzzword, right? And I get it. I understand that. But I think when it comes to insurance, look at it from a more human element, right? Our countrymen and our brothers and sisters in North Carolina absolutely destroyed by a flood, right? Devastation. Our brothers and sisters in California destroyed by fires, absolute devastation. Heck, we even had an issue up in, where was it? Tennessee, where there was a really bad winter storm and like 17 people died from like freezing temperatures and whatnot. So what I'm trying to say is that environmental disasters are going to impact all of us at some time or another. And as a country and as countrymen, we should be able to come together and we should be able to provide support to people all throughout our nation. So as a Californian, I want to be able to help those people in North Carolina. And if that means that we all have to pay into a pool of insurance, and then that insurance is distributed amongst everyone in the nation, then I personally think that's not a bad idea. Now, the question is great on paper, but how will it look in practice? And, the government's pretty good at making things not work the way that they should. So I can understand people's hesitation with that type of insurance setup. All right, innovative. The solution to high prices is high prices. California needs to build cheaper housing and reduce regulations. Our collective lifestyle is in excess of our collective means. I don't disagree with you at all. And California absolutely needs to build cheaper houses. And part of that is going to be the regulations and red tape. In California, land prices can't come down too much. California labor prices can't come down too much. And then material prices, they are what they are. But the regulation and the red tape and the bureaucracy and the time that it takes to get permits and the cost it takes to get permits can absolutely be reduced, should be reduced. And that is a great way. I mean, I'm sure on one of the streams in the last couple of months I think it was something like 20 to 25% of a home's price is fees, permits, red tape, regulations, bureaucracy, environmental studies, things like that. And that, imagine if we cut that down from 25% to 10% or 15%. As long as that can get passed on to the consumer, imagine if homes could be built for 10% less. That's a lot of money. Homes here, I average $800,000, 10% is 80 grand. That's not anything to sniff at. So I again, innovative. I think you hit the nail on the head. You're exactly right.
It's the same thing we've seen in the healthcare front. Single payer systems spread the risk among the entire population, and they're able to keep premiums down. Places like America, which don't do that, we have the highest prices in the world. And what Powell is observing is if we can't get the risk of insurance in some way moderated so that mortgage lenders feel more comfortable, you don't get mortgages. And that obviously is creating a situation that's very, very dire. As Powell said,
it'll fall on homeowners and residents, but it'll also fall on state and local governments which you see happening now, where they're stepping in states where insurance is going away, private insurance. You're seeing states step in because they want those areas to remain prosperous.
That's what he's talking about would be like the California Fair Plan, right? That's what Jerome Powell is saying. More local and state governments are going to have to say, well, if we can't get insurance from private insurers, well, we're going to have to provide it ourselves, because we can't have all these people just leave. We can't leave these people uncovered. And that's where the California Fair Plan comes into play. Cackleberry, let's see. Cities also need to ease up on zoning to allow modular homes, which are far more affordable than site-built homes. Yep, that's another very good suggestion that is low-hanging fruit, right? We're not talking about reworking the wheel, reinventing the wheel. We're just saying that these cities that have said, well, you can't build manufactured homes here. They have to be traditional built. They got to be at least 1,200 square feet. You have to have at least an 8,000 square foot lot. All of those things make it more complicated. They make it harder, and they make it, most of all, more expensive. So if we could have smaller lots with modular built homes, that is definitely one way. And you'd have to think, if it's a modular home, well, permitting can't be that hard, right? If it's a modular built home and you can say, hey, this is the home, here it is, it's coming from this company that builds homes, you'd think that a city would be able to provide a permit relatively easily and relatively quickly, so that they could start building that home and for less money. But hasn't happened yet, but maybe it will, right? So another great suggestion, let's cut the red tape, cut the bureaucracy, and ease up on zoning and allow for a wider variety of homes that could be more affordably constructed. We have not seen a huge takeoff in 3D printed homes. I kind of thought we would by now in this case. I know in some areas they are popular. I know in Arizona, I read a couple stories about how like they're making housing developments out of 3D printed homes, basically printing concrete. And I'm surprised we haven't seen more of that. But as technology advances, maybe we will. Maybe that's what we will see in the future. Maybe more and more homes will be made with 3D printers, and you just got to prepare the site, click go on the computer, and then come back 10 hours later, 20 hours later, and a home is there. Maybe that's what will happen.
And what that means, in short, is that this isn't just a problem for policyholders or would-be policyholders. It's a problem for taxpayers as well.
Well, I wonder with this if there will be any impact in California of the deal that the insurance commissioner made with insurers to allow them to use modeling when they figure out the risk of things having to do with climate change, weather, et cetera. And in exchange, they're going to give insurance to some of these fire-prone areas, right? Does that make any impact here in California?
Well, to bring everyone up to speed, what Lauren's referring to here is a change that the California Insurance Commissioner approved that allows insurers in California to not just use historical data when setting premiums, but to also use best guesses about climate change looking forward. And that's a moving target, obviously. And so in answer to your question, yeah, if you start putting climate change on the table, that changes everything, because that means all of the risk is exponentially higher since we know what's happening. Storms, fires, droughts, floods. That is what the future holds. Once you can add that into the insurance equation, insurance becomes even more difficult to then bring out. And obviously, as Powell just observed, if you can't get the insurance, you don't get the mortgage.
And that is crucial. I hear what he's saying right there, and I hear what you're saying, but doesn't much of the problem also just boil down to affordability? I mean, the ability to and availability of homes. I mean, we have a housing crisis to begin with.
Well, sure. And if we talk about supply and demand, that's obviously an issue primarily for home buyers, because it's not easy.
Bingo. See, and then and we're still talking about insurance, but we go, oh, supply and demand. Oh, yeah, well, that's obviously the biggest one. Not to minimize the insurance thing, but again, we all know it's about supply and demand when it comes to affordability.
Easy to get a home at an affordable price, but that's just the start of the process. Insurance, the mortgage, right, property taxes, all of the rest, it all starts to mount. And what that really speaks to is a housing market in which you're going to have haves and have-nots.
Today's actually a really exciting.
Yeah, and the haves and have-nots is a real problem. That's exactly what we don't want, because it starts to separate the society. And there's a world where I could kind of see, going back to sort of like a Middle Ages type thing where it was haves and have-nots. It was landowners and non-landowners. If you were a landowner, you got to vote, you got to have a say in your local government, you had much more power, and you were looked at as being a much higher status person. If you weren't a landowner, you were nothing. You didn't get to vote. You had nothing. You couldn't build wealth. You couldn't secure your family. And I really hope that's not what we're going back to seeing, because it could be, but I really hope it's not, because that's not the best thing for America. The best thing for America is to keep home ownership available for people of all different walks of life, backgrounds, income levels, wealth levels, all of that. We need to keep people owning homes, because that's what really helps build communities, build wealth for families moving forward, build generational wealth, and that's how we all become more prosperous. Home ownership is extremely, extremely, extremely important to the overall health of the United States, and not just from being happy and harmonious and citizens being happy, but also from a dollars and cents perspective. Real estate and the real estate sector is the biggest driver of GDP in America. So if the real estate sector goes down, or there's an issue and people simply can't afford to buy homes, we're going to have a problem. And it's going to affect a lot of people, not just the ones that can't buy a home. Let's see, Cackleberry, you got more for me. I would be okay with a Medicare type of insurance for homeowners if their premiums were reasonable. I would rather be one of the people who paid in and never had to use it than one who did. I'm right there with you, Cackleberry. I completely agree with you. And I'd like, for all those other people in chat, if you're watching right now, let me know what you think. Do you think a Medicare type insurance policy or plan for the United States as a whole is a good thing or a bad thing? Would you, be someone who would support that idea, or would you not support it? Let me know in the comments what you think. Me and Cackleberry, we're on the same page. I think actually it would be okay. Let's just assume the government doesn't mess up. Let's assume the government does the right thing. They manage the money well, they allocate it well, and the system runs good. Let's make that rather big assumption, but let's make it. So with that being said, let me know what you guys think. I would love to know if you think Medicare type insurance would be an overall benefit for the economy. Okay, so with that being said, we know that affordability, we have a little bit of an issue, and nothing is easy when it comes to buying a house. So one of the things that was kind of floated as hopefully increasing affordability was this change to realtor compensation and commissions. Now, I'm not going to get way into it. This is not a brand new story. This is more of an update of things that we talked about 6 months ago. So I'm not going to bore you with the nitty-gritty details, but let's catch you up to speed just in case you don't know what's going on with real estate commissions and compensation. So there was a lawsuit, a class action lawsuit that was brought to the DOJ last year about a home sale that said, I don't think it's fair that I have to pay the buyer's agent when I sell my home. I don't think it's fair that I have to pay the buyer's agent to negotiate against me. This is a very flawed idea and concept, but I'm not going to expand on why that is, because I'd be here all night on my soapbox explaining why that's dumb. Essentially, the DOJ said, you know what? You're right. Why do you have to pay the buyer's agent commission? Spoiler alert, the sellers never have had to pay the buyer's agent commission. It's never been a law. Real estate commissions have always been negotiable. It was just kind of a stupid assumption from people, particularly the DOJ. So what they did is they said, you know what? You're right. Us, the people at the DOJ, we think that's unreasonable. And so we're going to make a rule that says that sellers are not obligated to pay compensation, and it cannot be a requirement to have the seller pay compensation to put the property into any MLS. And we're gonna sue the National Association of Realtors for $400 and whatever billion because we feel like the home sellers have been wronged. So home sellers won. Each home seller won about $21 from the class action settlement, and the lawyers won about $200 billion from the settlement. So they're doing just dandy. So that was kind of how things shook out. And then what happened after that is that now all of a sudden, when you go to buy a home, you have to make an agreement with your agent, your buyer's agent, and you have to pay them. You have to make an agreement that says, I will pay you this much. Now, what's happening is that many home buyers are saying, okay, fine, we'll make that agreement. But then when I write the offer to buy this home, I'm going to ask the seller to pay for commission. So with that being said, with that 2-minute Reader's Digest version, getting you guys up to speed, let's see if these changes have made any difference and what effect, if any, they've had on the real estate climate, specifically regarding to affordability and agent compensation. New real estate rules threaten to upend home buying for Americans. Here's what experts say has changed. And when this first came out, people thought, oh, this is going to make a huge difference. Real estate agents are going to go away. Real estate agents are going to get out of the business. Real estate agents are going to get paid less. It was just like, what's going to happen? Well, we'll see. Last summer, rule changes from the National Association of Realtors, the powerful real estate trade organization, threatened to upend the way Americans buy and sell homes. Some experts predicted the 6% commission, the unofficial fee for buying and selling a home, would be finished. This whole sentence really, really, really pisses me off. It really upsets me because there's so much about this that's bunk. Number one, unofficial should be bold, italic, undersized, size 40 font in red. There was never any type of set commission. So for them to say, some experts predicted the 6% commission, there is no set commission. There never has been, there never was, there never will be. This number that is highlighted has always been negotiable. It always has been, always, since the dawn of time, since the dawn of real estate. So the fact that a lot of people go, oh yeah, that the standard 6% commission, right there, if anybody tells you that, you know that they're not worth their weight. They don't know what they're talking about. They're not an expert. They don't know what they're doing. So just keep that in mind. Now, 6 months later, as the 2025 spring home buying season kicks off and the turbulence caused by the new rules has faded, real estate professionals say the actual effects have been muted. Paperwork has changed, and I think some really good things have happened in the way most of us discuss commissions up front with our buyers and sellers, said Brita Kleingartner, a realtor in Los Angeles. But I don't think the business has changed in any way. Interesting. Let's see. Innovative, what do you got? My agent made me pay the seller's fee at gunpoint. Afterward, he stole my car and kicked my dog. Those bastard real estate agents. Oh, realtors. They're the greediest, scummiest, scammiest people in the world. There's no such thing as a good, honest realtor, right? Innovative. I love when you pop up with comments. You always make good stuff. My agent made me pay the seller's fee at gunpoint. Oh my gosh. I hope you're able to survive that very traumatic event. Let's continue. With mortgage rates hovering around 7% for the last 6 months and average home prices across the U.S. continuing to rise, the new rules, which took effect in August, had spurred hope that commission paid to real estate professionals would plunge, making home buying and selling less expensive for the average Americans. And you know what? It's so funny. This is such a penny rich, pound foolish idea. Oh, homes are too expensive. We need to increase affordability. Okay, let's go after other Americans' salaries. No. Instead, let's not cut bureaucracy or red tape or ridiculous government fees or corporate profits. No, let's go after the individual real estate agent. Why would we do that? Why? And I'm not just saying that because I'm a real estate agent. That's like saying, oh, you know what? Cars are too expensive. It's too expensive to own and maintain a car. So let's make mechanics lower their fee. Let's not go after Ford or Chevy or GM or BMW to make them provide a more affordable product or change regulation to lower the cost. No, let's go after the mom and pop mechanic. That would be foolish. That would be stupid. And that is exactly what they tried to do in this scenario. Last year, TD Cowen Insights estimated that new rules could cause fees paid to realtors to fall by 25 to 50%. Whoa, that's crazy. I wonder if they were right. Instead, commissions have remained largely unchanged since August, according to a study released this month by real estate platform Redfin. For relatively lower priced homes that sold for under $500,000, Redfin found that the average commission has increased since the rules took effect. Isn't that wild? And I can tell you, just from my point of view, from actual boots on the ground, from an actual agent that deals with normal, regular, everyday people, I can tell you that the commission that I earn It really hasn't changed. And if anything, it might have gone up just a little bit, just a little bit. So this is what happens. This is what happens when you try to change things and it's not a well thought out change. And this commission change was not a well thought out change. This was a knee-jerk reaction that was the result of a very poor lawsuit that was not litigated well, and a DOJ that, quite frankly, thought that they were doing something important. And in reality, they weren't doing anything important at all. I think they have far greater things to concern themselves with than the price that real estate agents charge to their consumers. They don't seem to be very involved with how much lawyers charge their clients, or how much doctors charge their clients, or how much mechanics charge their clients. For some reason, they're very concerned with what real estate agents charge their clients. I don't know why they're so fixated on that, but they are. Representatives from NAR did not provide a comment when asked about the settlement. Of course, they won't. NAR hates the settlement. They wouldn't touch it with an 80-foot pole. Home sellers mostly still offer to pay commissions, realtors who spoke to CNN said. One thing is certain. If the intention was for sellers not to be paying buyers' agents' compensation, that's a total fail, said Summer Gorelick, a real estate compliance consultant. It's continuing as is and just being repackaged in a different way. And I have to say, it's completely true. Because what happens is the sellers really quickly found out, okay, if I'm going to sell my house, I don't want to pay the buyer's agent. I'm not going to do it. And I know I don't have to. I know the rules. I know my rights. I know I don't have to. You're right. You don't have to. And when people want to buy your home and someone submits an offer and they say, hey, I will pay you $600,000 for your home. You're asking $600,000. I'll give you $600,000, but I want you to pay 2% to my buyer's agent, because that's what my agent and I agreed is a fair wage for his work, but I want you to pay it because I'm giving you $600,000 for the home. I don't have enough money to go give my agent another 2% of that. So if that seller says, oh, well, buyer, I know I don't have to do that. I'm not obligated to do that, so I'm not going to do it. Well, that buyer then might say, okay, I can't afford to buy your house. I can't afford the down payment, the closing costs, the insurance, the property taxes, and to pay my agent. So I'm just going to go find a house where the seller will give me 2%. And if you're a seller, if you stand to make $100,000, $200,000, $300,000, $400,000, wouldn't it make sense to just pay the 2% so that you could make $300K on your equity or more? I mean, heck, depending on where you are, you could have a ton of equity. Properties have gone way up in value, and it just seems very short-sighted. And in fact, I've got a real-world story about this. There's a listing in my neighborhood, in my town. It's a $2.2 million listing. They went on the market, and another agent in my community submitted an offer with it was a very good offer with a very good buyer. And they submitted a great offer. And they said, hey, we'll buy your house, but we want you to pay 2% to our agent. That seller said, I'm not budging on, I'll come down on the price $10,000. It's a very negligible amount. And I'm only going to pay your agent 1%. Look at how savvy I am. And I won't negotiate. Guess what happened? Take a wild guess. That buyer said, I'm not going for that. Because now not only are you not giving me a good price on the property, but now I have to add on an additional 1% out of pocket, which 1% on a $2 million home is not an insignificant amount. So the buyer walked away. The buyer said, forget this, I'll go buy a different house. And guess what the buyer did? The buyer went, found a different house that they liked just as much, and a house where the seller was willing to compensate their buyer's agent. So I said, okay, great. If you give me a good offer, if I can sell you my house, if I can make some money, I'll pay your buyer's agent. And that's exactly what happened. And that client ended up going out and they ended up buying a different house. Guess what house is still on the market? After over 100 days on the market, guess what house is still there? The house that chose to not pay a buyer's agent. It's still sitting on the market. Now, what's the mortgage on a $2.2 million home? I don't know. Depends what they put down, depends on their interest rate. But let's just say it's $15K a month. Okay. That person has had to pay 3 extra mortgage payments. What's 15 times 3? $45,000. What do you think's cheaper? Spending $45,000 in 3 months of mortgage plus insurance, taxes, and utilities, or just paying the fee to sell the house 3 months ago? This is why this is a penny rich, pound foolish. And this is why sellers should and probably will continue to pay the buyer's agent's fee. Not all the time. It's still completely negotiable. And in some situations, a seller might get away with not being able to have to pay a fee. But I'll tell you what, this is a great real world example of a seller that is going to lose a lot of money because they chose to not pay a small fee to the buyer's agent. Hey, Dominic, what's going on, buddy? Thanks for joining the stream. As a seller's agent, do you encourage your seller to not be a dick? Yes, I do. I tell them right up front, right away. In fact, I had this conversation probably 3 times this week with different people that are thinking about selling a home. I told them, I said, listen, here's my rate to sell your home. This is what I charge. This is my rate. And when you get an offer, be prepared that that offer is going to also want you to pay. So I'm just going to make this up. Hypothetical numbers. Today, if I was talking to a seller, I said, listen, Mr. Seller, my fee to sell your house is 2.5%. I'm not going to charge you any other fees. I'm not going to charge you fees for photography, for marketing, for administration. Just pay me 2.5% and I will get your home sold. I will get you a great result. Okay, that sounds good, Joe. Let's go ahead and do it. And I'm going to say, but just keep in mind, you're probably going to have to also pay the buyer's agent between anywhere from 1.5% to 3%. We don't know, but we can negotiate. So I tell my seller, listen, you're going to pay me 2.5%. You're going to pay me 2%. You're going to pay me 3%, whatever we agree upon. Again, for example purposes only, if anybody from the DOJ is watching, this is solely for example purposes. If I am charging 2.5% and a buyer's agent brings an offer and they say, yeah, great, we'll give you all the money, but we want you to pay 2% to my buyer's agent. Well, everybody, what's 2.5 plus 2.5? It's 5. This 5% total is what that seller is going to pay in commission. Guess what the normal range for commission was before this lawsuit? Between 4.5 and 6. Wow, look at that. So we really ended up at the same spot. So yes, Dominic, I do tell my sellers to anticipate that they will have to pay a buyer's agent fee if they want their property to be competitive. If they want to attract buyers and buyers go, ooh, okay, great. I know if I buy this house, I don't have to pay my buyer's agent. I'm on the hook for 2%. But this seller is saying, I'll take that off your plate. Ooh, I want to buy that house because the house over there isn't going to do that. Right? So it's just like when a store puts something on sale, right? If you walked into a store and they had a red t-shirt over here that was the same exact red t-shirt over here, but this one was on sale for $9 and this one was not on sale and it was $15, which one would you buy? Of course you're going to buy the one that's cheaper. It's the same thing, right? So yeah, Dominic, I do try to convey to my sellers, hey, number one, don't be an idiot. Don't be one of these people that just says 0%. I'm not giving anything. Figure it out yourself. And I totally manage their expectations and try to convey to them, hey, chances are at the end of the day, you're still going to be paying between 4 and 6% for commission total. It's all negotiable. We'll see how the chips fall, but just be prepared. So hopefully that makes sense. The real estate upheaval that wasn't. This is great. This is exactly accurate. 2 key changes were part of a $418 million settlement announced last March after a series of lawsuits alleged that NAR, which counts 1.5 million real estate professionals among its ranks, had informal rules that propped up the industry's traditional payment structure. That meant home sellers were typically on the hook to pay 5 to 6% commission split between their agent and the agent representing their home's buyer, which again, this number, all negotiable. In fact, anybody out there in chat, if you're thinking about selling your home or buying your home, go ahead, negotiate. You should ask, you should try, and you should make that agent explain to you what their value is and why they deserve between whatever their, 1, 2, 3, 4, 5, 6%. Go ahead, negotiate with them. You have the power to do that, and you absolutely should. Just keep in mind that you're going to be negotiating with someone who negotiates professionally for a living. So not saying that you can't do it, but you better have some really good points as to why they should work for less. And that agent should have some really good points as to why you should pay them more. But go ahead. I fully think that you should be able to negotiate, and you should absolutely try it. The first change required all agents working with a prospective home buyer shopper to enter into a written agreement before touring a property together. I'll tell you right now, this is stupid. This is fine with me. I don't mind it as an agent, but this is really, really a pain in the butt for buyers and for consumers. It just adds another layer of complexity to the home buying process. It adds more paperwork, and it really makes it much more clunky. The contract is designed to inform buyers that they are responsible for paying their own realtors if a seller chooses not to cover that cost, which that part is true. Now, we're kind of forced to have that discussion maybe sooner on in our relationship with a buyer, said Cleen Gartner, the realtor from Los Angeles. I think that's been great. This, I fully agree with her. I have talked with more buyers about commission upfront now than I ever had before the settlement. Because before, my clients would say, Joe, how do you get paid? You've done all this work for me. Are you going to send me a bill? And if so, how much? And I always tell them, no, you don't need to worry about that, because the seller is going to compensate my brokerage out of the proceeds from your purchase. So essentially, you, Mr. and Mrs. Buyer, are going to give the seller a bunch of money. And then that seller is going to turn around and say, hey, you know what? For getting me all this money, I'm going to pay my agent. And then the seller's agent would say, hey, Mr. Buyer's agent, you did such a great job. You brought me a buyer. You made my job easier. I'm going to break you off a piece of my commission. Now, that doesn't really happen anymore. I mean, it does, but the new law, these new rules were meant to kind of make that go away. But it hasn't. All we do now is we call it something else, and we just do different paperwork. All right, Cackleberry, what do you got for me? What do you think about a real estate agent that makes you a below market offer to buy your house himself? We have one up here that does that a lot. He wants to be the king of Idlewild, I think. Mr. Idlewild. We got one of those in Claremont. We got a guy in Claremont called Mr. Claremont who operates in a very similar, weird way. I think that, listen, I would never be insulted if someone made me an offer to buy my house unsolicited, even if it was low. I'm never going to be insulted, but I'm in the world of business. I'm in this world. I get that it's just a number. It's just business. This guy is trying to buy a house for below market value. He's probably looking to flip it or rent it, most likely flip it. Good for him. There are some people out there that would prefer to have a quick cash sale, even if it means not getting the full market value. After all, what's the price for convenience? Maybe there is someone in your neighborhood, Cackleberry, that goes, oh my God, you know what? I'm in some serious trouble. I have a medical bill that's really big. I can't pay it. I can't get enough money. I need to sell my house really quick, and I'm going to go have to move in with some family. Well, maybe they can't take the time to put it on the market, market it, sell it, get offers, do all that stuff. Maybe they just need to go, you know what? I know my home is worth $350. This guy right here is willing to give me $310 cash right now. And that is worth more to me than getting $350 for my house. So that's kind of, my impression on that. Don't be offended by it. But if you don't need to sell your house, just tell them to go pound sand, tell them to go away. Let's see, he does both flips, rents, and turns them into multifamily apartments. Yeah. So he's just looking for a deal, right? He's an opportunistic person, which, you can have your own opinion about that. Some people think that it's kind of, BS to be, an opportunity seeker. But at the same time, hey, if both people agree to the deal, right? So yeah, if it works out for him, it works out for him. Hey, David, how's it going, buddy? Glad you could join the stream. Hope your week's going good. All right, let's get back to it. Some states already required such agreements before August. This is true. Our state, California, did not, but some states did already require that. The second change bans offers of compensation from being shown on multiple listing services, which were centralized databases used by realtors to share details about the home sale. Prior to the rule change, realtors were accused by some critics of only showing homes where sellers offered the highest commission to shoppers as agents. Though NAR said that practice was always against its rules, which is absolutely true. I'll tell you this. I personally have never not showed a home because of a commission amount. Some agents probably do that, but there's bad professionals in every profession, right? There's bad lawyers, there's bad doctors, there's bad teachers, there's bad plumbers, there's bad electricians, and newsflash, there's bad realtors. So that's nothing new. I think the appropriate thing to do is when a home was offering a really, really low commission, say something like $500, on a $700,000 home. At that point, what I would do is I would go to my client and say, hey, listen, I'm happy to show you the home. I just want you to know that the seller is offering a below average compensation, and my brokerage won't allow me to expose us to liability for $500. At that point, it doesn't make business sense for us to engage on that property. So I'm still happy to show you the property. However, if you do want to proceed with purchasing the property, you will have to come out of pocket with compensation to make up that difference, which we can negotiate and talk about. And guess what would happen? 99 times out of 100, those clients would say, wait, you mean I'm going to have to buy the house and then also pay you? And I'd say, yes. And then they would say, but is that like that for most houses? And I'd say, no, for most houses, it's not like that. And here are all the homes that you wouldn't have to do that to. And I would turn around and show them 30 other homes where they wouldn't have to come out of pocket. And I'd say, listen, I'll still show you this home, but you have to come out of pocket. Do you still want to see it knowing this information? And guess what their reaction was? No, I want to go see different homes that make it so I don't have to come out of pocket. Basically, the same thing has persisted. However, realtors are not prevented from calling each other and asking about commissions under the new laws, which is absolutely true. It just can't be published in the MLS. John Reuter, a realtor in Sun Prairie, Wisconsin, told CNN he thought the change had made the home buying and selling process more opaque. Realtors cannot see whether any previous homes in their area have successfully sold while offering a lower commission, which might be useful information to provide to home buyers and sellers, which in a certain sense is true. Before the commissions were published, they were known. They were put in the MLS, and that MLS commission was put on Zillow and Redfin and Truly, all these things. They were right there. You could see buyer's agent was going to make this much. And home buyers knew, hey, I know exactly how much my agent's going to make. I know that I don't have to pay them. I can see very clearly. Now it's not published anywhere. And the rate of compensation could change from one agent to one agent. You might have a listing agent say, oh, hey, buddy, my friend realtor, you know what? My seller was only going to offer 1% for commission, but you know what? For you, you're a nice guy. You're my buddy. I'll tell them they really need to give you 1.5%. And then another agent could call and say, hey, Mr. Seller, I have a client that wants to see your home. And maybe that listing agent says, you know what? You're not from my city. And I don't like people that aren't from my city. So you know what? We're only going to give you 0.5% commission. Well, how is that transparent and how is that fair? One listing agent could say, well, we're going to offer this to you and we're going to offer this to you, even though you're doing the exact same thing. So again, there are some things that have complicated from this ruling for sure. The rule changes were supposed to make commissions transparent, but they haven't. It's done the exact opposite, Reader said. If you look at properties, you have no idea what the commission was paid on them. Nobody knows what's going on. A little overdramatic, but his idea is correct. The settlement terms, including the practice changes, were officially approved by a federal judge in November. However, the settlement still has its detractors. Tanya Monstier, a professor at the University of Buffalo School of Law, said she plans to file an appeal in the hopes that NAR's settlement terms get thrown out. I'm hoping that the judge takes a close look at this and sees that this was basically a whole lot of smoke and mirrors. She said these were not valuable practice changes, but just cosmetic ones, which I don't disagree with. It's a sad state of affairs, but I think all of this was for nothing, she added. And I think she's right. These comments are wild. I looked at them a little bit. I thought about doing a comment review on stream. I'm not doing that because these comments are stupid. It's a bunch of people saying, oh, I could just sell my home myself. I've always sold my home myself. You don't need realtors. Realtors are greedy and they're scumbags and they're terrible. And to that, I say, you've always been able to sell your home yourself. So why do only less than about 7% of people do it? Why do a large, vast majority of people use real estate agents? Maybe it's because they value the real estate agent's time, expertise, professionalism, knowledge, experience, all of those things. And perhaps maybe people don't want to leave the sale of their biggest asset up to themselves, Because remember, they've got day jobs too. What are you going to do? Go work from 9 to 6 o'clock as a mechanical engineer, and then come home and work on trying to sell your home and study up on real estate law and disclosures and contracts and inspections and appraisals and all of these different things that agents do every day? It's not very likely. So at the end of the day, the lawsuit really didn't change a whole lot. So guys, I thank you so much for hanging out. This has been an absolutely wonderful stream. If you guys need any help with real estate, I'm going to flash up one more website, and I got to plug my own website, right? So we're going to share this tab instead, go full screen. If you need a real estate agent, if you need a trusted real estate partner, if you are looking to buy or sell, whether or not you're local here to Southern California or not, go to my website, workwithjoerealtor.com, 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 just in case you didn't get it. And you can go to the link. I just put it into chat as well. And you can click on any one of these buttons, and you can read a little bit about me. Click on any one of these buttons, and you will get taken to a Calendly link where you can book a time to have a call with me. You can also fill out a form that will just have a few questions. And then I can set you up with a great realtor in your specific neighborhood. I have realtor contacts all over the place. Like I said, I was on 4 streams this week with agents from all over the nation. West Virginia, Washington, D.C., New Jersey. Been on for Boston, up in Seattle. I'm going to be on one in Florida next week. So I have great connections with realtors all over the nation. So if you are looking for a good real estate agent, go to my website, workwithjoerealtor.com, and you can connect with me. And if you are in the Southern California area, if you are in the greater LA area or Inland Empire, well, guess what? I'm happy to work directly with you. So if you have any needs in my local immediate area, which is mostly Los Angeles County and San Bernardino County, I would be happy to help you. And you can go on the same website, click the buttons, and we can get connected, and we can have a fun time. So as always, guys, thank you so much for hanging out. This has been an awesome stream, great viewership, great participation. You guys are awesome. We'll be back next Wednesday with another great live stream. I don't know exactly what we're going to talk about yet, but if you guys have any suggestions, drop them in the comments. And if you guys think of a suggestion after the live stream ends, drop a comment on the replay. I do monitor them, and I'll be happy to cover whatever topics you guys want. I think that's it. That's all I got for you guys tonight. So have a great rest of your week. Thanks so much for hanging out, and I will see you guys next Wednesday. See you guys. Bye.